you're
It is
so
the
articulate.
number one commercial real estate asset for them to get into.
But can they get into it if they don't have any experience?
So what you do is in small towns, you have small facilities by mom and pop operators. You have all this technology and stuff, but this is going to be your real business model. What you're going to do is...
We've got AJ Osborne on the channel, a good new friend of mine. I wasn't friends with him 2 years ago, but I've recently become friends with him. I'm so impressed by what he's doing, and I'm even more impressed by what his wife is doing with her school. So watch that episode if you have not. But welcome to the show, AJ.
Thanks, man. Appreciate being on here.
Why self-storage?
Because self-storage is a business, not an investment.
What?
That's right. Self-storage I look at as business full of operations. We look at units as if they're products, and we have customers that come in. I view it way more like a retail or even like hotel. Customer acquisition is king. Units are varying from businesses to individuals, the utilization from RVs, right, to wine storage. There's just so much that goes into with both the customers and the product type and how they use it. And it varies widely.
Have you ever said this before? Because I've never heard somebody actually break down self-storage that way.
So yeah, I talked about it in my book and talk about how we have an emphasis on the revenue, because I look at our revenue basis is like levers that we can pull to do revenue management. When I looked at other asset classes like multifamily, the market set the price. So let's say you have a one bathroom, two bedroom, right? Depending on its location and general quality, they'll all be the same, right? The market will set a price within a varying amount. That's what it is. That's not how storage works. So you could have two storage facilities basically across the street, and their gross revenue could be very, very, very different.
Wow. You love a show when I can actually learn something myself. Why the heck is that even possible? Because, by the way, in multifamily, we say 2-bed, 1-bath, not 1-bath, 2-bath.
See, I'm learning.
Just so
I'm
you know.
learning.
There you go, AJ. There you go. So how is that even possible?
So we have short-term rentals, first of all, which makes it very good during downtimes and also inflation, a hedge against inflation, because we can move immediately. And our in-place rents and street rents, right, are not the same thing. So you may be selling a 10 by 10 for $100, and let's say I have 100 10 by 10s. Every single one of my tenants has a totally different rate. They're on a different rate schedule. That's always changing.
Did anybody know this? Did you guys know this, John? No. I've never known this.
That's right. And so
Are you the only guy doing this?
So the REITs really broke into revenue management. And we have a tech stack that we've built out, including our property management software company that we have in Southern California. And it was designed around this. So we go to the market, we take individual products, we know our customer base, what they'll pay, we know where they're located. So if I'm looking at a storage facility, for example, we will look at the landscape, which we look at drive time and proximity, and then we may target a section of the city where we look and say, this section of the city's average income is X, and on average, their loan per RV is $250,000, which is a very big differentiator from areas like over here. So then we will create marketing campaigns to strategically target and charge higher prices to those areas, and we will deliver products specifically for them. So then we can increase our per rent revenue. And so we can dynamically change all of this all the time. We're always doing it. We're always looking at units and pricing as they're coming in. They're constantly changing and weaving. Marketing strategies, new product offerings. We'll remove certain walls. We'll do drive-through through contractors, drive up climate controlled for people that need cold storage and vendors.
So you're telling me you could have 100 10 by 10s and have 100 different prices?
Yes, that is what we do. 100%.
And because of your software, it's manageable. If somebody was like a Mon Pa doing this all on, Excel, it'd be a nightmare.
Be a nightmare. It's a lot of work. And that's actually how we started out. So starting it out, our revenue management system was that. And it was a guessing game. So how much do we raise rents? And then you say, oh, well, let's raise
you
rents
probably had to
on
drive
the 10 by
over to your
10s.
competitor's office and like, hey, I'd like to rent some. You were like a secret shopper.
Exactly. Secret shopping, and everybody was nervous about raising rents. And the reason why is they were doing it based upon the market. We don't do it based upon the market. I raise rents predicated on my customer and my products. So the only time that rents in the marketplace come in is when you have too much product, you have oversaturation, and too much of the similar product. Then customers have lots and lots of options, right? So then it's like, okay, now we're price competitive. We don't want to be in that game. And so we try to build as well as buy specialty type units to where we're not playing that game. We're working solely on the customer, our renters, and what they're using and how they're using it for to determine the price.
Guys, if your mind has been blown, make a comment down in the comment section. I did not know that any of this.
Yeah.
Is this something that you guys have kind of adopted and other operators have not really adopted yet?
So really this started out, there were operators, mostly the REITs, that came in and they were starting to do this. The larger operators were starting to play around in it, but the vast majority of operators, no. In fact, that's how come our business model works so well. So if you look at our overall business model, what we did is I tried to build out everything that the REITs have. So I have construction management, I have an architecture firm, I have a debt brokerage firm, we have property management, acquisitions, we have finance, we also have a national brand, which is important. Then we have our tech stack with software companies in it that allow us to access data. And we put all of those things together, right? And now this machine can be very, very efficient. And when we went out to market, what we're doing is we're buying what I would call real estate assets, storage facility operators that operate and own them like a real estate asset. I buy them and turn them into a business. And that's where my profit comes from.
Genius.
It's cool stuff.
You just taught me something.
Yeah.
I looked at, because I'm not in storage facilities, I'm an LP in 3 other people's deals. I hope to be an LP in one of your deals. By the way, if I wanted to be an LP in one of your deals, and meaning invest in one of your deals, where do I go?
Yeah. So you can go to cedarcreekcapital.com.
Do I get a mug or a glass beer mug if I invest with you?
You certainly can. So
Do I have to request it?
you probably would have to request it for them to know. But
Don't invest with him unless you request a mug of some sort.
or a hat.
Or a hat. Get a hat. A hat's
Get a
probably
hat.
a good way to go.
Yeah.
So I can invest in you. Do you have any active raises going on right now?
So we have 2 developments that we're doing. One is so we've really been a pioneer in a lot of things like keyless technology. So where you don't need locks and keys at all. You use your cell phone and the doors and the gates, everything move and unlock. We were one of the first in the nation to roll that out, and we built it into a facility.
Of course you were, dude.
So-
I've been to your house. Like,
Yeah.
I walk into his house the other day. By the way, we did a great MTB Cribs episode. If you guys have not watched that, we'll put the link somewhere on the screen. But I walk in your house, you're like, Josh, watch a movie. Josh, raise the blinds. Josh, cook me some eggs and flip them eggs. And you have this AI in your house. It's completely automated other than your voice.
Yep.
And your entire house is wired.
That's right.
So you're doing the same thing for your guys' assets.
Yeah. So in there, we wired the doors and locks and all the components. And at first, we didn't have it Bluetooth or anything. It was actually hardwired in. And this was a huge learning curve, very difficult. And we teamed up with a company called Noki, and we put it all together and then tried to embed our software to merge the hardware and the software in together to make it seamless for our customers. Well, we're doing that with all our deals that we do now, but we did that in a bankrupt Super Kmart that we turned into a storage.
Is that the one
years
in
ago.
Vegas?
Reno, yeah.
Reno, okay.
Yep. And that deal we purchased, we did the whole entire deal for $7-8 million. We put around $3 million into it. And as of last year, we had multiple offers above $30 million for that in 5 years. So it's cool stuff.
So that's why you get into self-storage.
That's why you get into storage. The new one we're doing now is actually an old office building. So it was a newspaper company that had an office building. Then it had its printing and shipping part on the back of it. We bought that right on an exit going into downtown, and we're turning that into a ginormous storage facility now. So it's a first of its kind, and we're doing some cool things in that. But another development we're doing, which is a perfect example of this, is in Surprise, Arizona. So what we did is...
Ooh, I want to invest in that one. That's right down the road from me. Can I invest in that?
Yes, you can, and this one's an amazing one.
Is he allowed to talk about this on
Oh,
social
yeah, attorneys?
We
Yeah,
we
we're
have
good? Okay.
we have his attorney here,
That's
guys,
right.
just to verify.
Yes.
Bethany LaFlamme, by the way, go watch the episode I did with her. She's unbelievable. So, can we talk about minimum investment?
Yeah, 100,000. First-time investors, we on special occasions will go down to 50,000 for them, but usually it's about 100,000. And we have a very different approach than anybody with our investors. So our metrics that we use, we don't flip. So we keep our investors in the whole time. What we do is we have a 4 to 6 year period, which we buy an asset, so we're value add. So I'm turning around facilities, right? So we buy it, we put all the work into it up front, we turn it into an active running business with much higher revenue and profit margins. We refinance that money out, we give that back to investors plus profits of 20%, and then we keep operating the deal and the investors stay in with us. So we don't
Where
kick
do I
them
send the
out.
check?
So
I'm in on
you know,
this.
just right here, we're good.
Can I can I visit the property if I invest with you?
Absolutely. Yeah, we have, funny, we actually have an old congressman who is a partner, and Tarek is a partner in the deal too. And so he, Barry Goldwater, and his father was a senator in California, he was a congressman. Very funny every time I fly into the airport and see the Barry Goldwater side. But he helped us really get this incredible location there in Arizona, get it streamlined and pass through. And when we're looking at deals like that, most people start with the location itself. We start with the area, then we look at different locations, but then we cater that to the products, meaning that we design everything catered to every neighborhood. I view it as every door has a customer, so let's find the customers, then build the doors. And so with Arizona, it was cool because we could find these niches. Like within this area, we had a 3+ mile radius where there was no enclosed RV storage. The Toll Brothers neighborhood next to us does not allow RVs in their entire development area at all. And when we
Amazing.
talk
Which
to
is
them,
like your
number one
Surprise,
question,
Arizona. Everybody's in.
everyone.
If you live in Surprise, Arizona, you don't have a job. You are an RV hobbyist, and you might even have multiple golf carts that you cruise around. Like Surprise is retirement central.
They're building a RV distribution, an RV sales lot on the site of our storage facility. And then
Wow.
another one across the street. So we put in the back RV, then we did multi-story climate controlled. And so what we did is we actually mixed up the consumers to hedge against different market cycles. So we say, all right, we have different products, different types of consumers, and we merge two business models into one. We know one has a faster fill-up rate, but not a higher rent per square foot. So what we'll do is one, we'll fill up fast, cover all the expenses, then maximize in the multi-story climate control. And so you get this great blended average over a large facility, which is over 200,000 square feet, and the operational expenses don't change, whether it was 100,000 square foot, 100,000 square feet, or 200,000 square foot. The operating expenses are generally the same.
I need to hang out with you more often.
Seriously, man.
If you guys are learning something, make something in the say something in the comments. If you guys have maybe gotten lost on one of the words, say something in the comments, and we'll maybe make another video in the future about it. Maybe you can come down to Surprise and do a video with me.
Be happy to.
Ben, are you down for that?
Down.
Would we do drone shots with it?
We would do drone, we would do all of them.
All of them. Okay.
We can do that.
So I can invest in your deals, which is great.
Yep.
You're not flipping. You're
Nope.
refinancing, getting your investors their money back. They're retaining ownership
Yep.
after they get their money
After
back,
they get their
plus
money
the
plus the
return.
profits. Yep.
That's bonkers.
Yeah. I view it as a stacking model. So for us, our investors come in, they put their money in, and the whole goal was that somebody could put $100,000 in with us, 4 years, refi, take the profits, but then take that $100,000, put it in another deal. 4 years, another deal. And so they're compounding out, and then, over 10, 15 years, they own all of these storage facilities with us because they still have the ownership off their original investment, instead of turning it over, risking that principal again. And if you look at it, your returns are way higher, obviously, on that end, because then we refi it again. And you still maintain that equity. So then all of a sudden you have all these properties, you have equity, cash flow, you're getting refinanced out, all from that original investment.
Okay, who is your general, your second in charge, your right hand? Who's your person that helps you operate this stuff? You're here running an event.
Yeah.
Thank you
Yeah.
for having me, by the way. Really appreciate it.
Yeah. Thank you for coming.
Somebody's got to be running the business.
Yeah, we have around 100 employees, and we have multiple executives that are running all the different components. So the architecture business, we have our head there, everything from our debt brokerage, right? We have our property management company, which we have 2 executives over, including one that I stole from Marriott.
Nice.
Yes, so very good because he does the placement of properties and the turnover.
He knows a
and
thing
the
or two
units.
about that.
Yes, he does. Really, really good on that. And then on the private equity side, I have my integrator, which is Sam, and very, very much opposite from me. He would die if he had to be here or on camera.
Really?
So yeah, he hates. He's like, keep me out of the crowds. Let me operate.
You're kind of a unicorn though, because although you are a visionary, you have a lot of integrating tactics,
Yes.
or like parts to your
I
personality.
do like the integration. So I do like the building out and working through it. And so I do help that. I really look at this end picture and all the components that go into it and how we need to do it. I like to build the upfront, start the integrating, and then I like my integrators to optimize and run the back end as I continue to build.
How often do you have to go to the office?
I go to the office basically every day because I love it. I love my team. I love going in there, but I travel a lot. I spend obviously travel with my kids and family too, but I like going to our office. So I get to go in there and hang out with all our executives. We're doing so much in the space that it's like we're now implementing AI. We've got so many projects that we believe are cutting edge. At the end of the day, we want to be the first company that gives you everything that a REIT has, but you can have ownership. Because right now, if you want to own a part of a REIT in these huge mega companies that are amazing, you buy a stock, right? We want you to actually own equity, but have the power of those REITs. So our brand is a national brand, which is really important when you're talking about ranking SEO, right? Our tech stack, we own. No other private companies, right? They don't own it. You don't get those advantages. It's fragmented out. So we're centralizing all of it, just like those huge $50+ billion companies do.
Love it. Okay, so a couple more questions. One, we haven't talked about your story.
Yeah.
And I don't want to talk about your story today because I'm sure you've told that story multiple times. Where's the best place somebody could go? Is there somebody else's podcast that you laid it all out? Was it a Bigger Pockets episode? Was it maybe you did something with Brandon Turner?
Yeah.
Where's the best place you would send people if they go, I want to know more about what
Yeah.
AJ is doing and
So-
where he came from?
Yeah, 100%. Bigger Pockets. You can go on there, check it out. You can go on to my podcast, AJ Osborne, and check that out. We have story, and I think we have a YouTube video too that walks through everything that happened and how we got
You
it.
have a pretty spectacular story. You were paralyzed, and during being paralyzed, you actually lost your job. You got fired, laid
right.
off
That's right.
while you were paralyzed.
That's correct.
And so there's an amazing story there. The origination of your company and where that all was came from. And I don't want to go through it today because I think it's
Yeah.
a story that should get 30, 45 minutes.
100%.
So guys, we'll put a link in the description so you guys can go and watch that. A question I had
Yeah.
that's the silliest question, but people that are not in self-storage, I just assume every one of your clients is a what?
Hoarder.
Hoarder. Literally, I'm like,
Yeah.
are there that many people hoarding
Yeah.
stuff?
It's the biggest misconception.
Do people just love stuff, dude?
Yeah. So the actual reason self-storage exists is a economic and regulatory issue. So as of right now, what has happened is, if you think back, like when my dad wanted to store stuff, he built a shop in the backyard.
Right.
Today, real estate is very regulated and dictated by not only the government, but also HOAs. So land and real estate prices have soared. So the price of space is way, way more valuable. And it costs a lot to add on. But more importantly, most of the things that you would do, put an RV outside on the road, you can't do that anymore.
Trailer. Like
Yeah.
if you're a contractor, you
No.
have a bunch of trailers that are not being used because it's wintertime or
Yep.
whatever else. Like, where
Can't
do you
do
put
it.
them?
Exactly. So all of a sudden now, all of the stuff that we already had and all of the activities and entrepreneurs working out, they had to go somewhere. Then internet came around and we had a big, big problem with last mile. What that means is that these big mega companies, they deliver things to a city. So let's say Amazon and other people deliver things to a city.
Yeah.
But then how do you get it from this huge warehouse in that city to the actual location? So we have, like, Red Bull fills up Red Bulls and things in our storage facility and then takes it and delivers it to their individual locations. We're closer.
So
we're
they're
into those
basically just
locations.
staging it. They're like, all right, we're
Yeah.
going to stage it here
House
for a
it.
couple of weeks until we get, orders or whatever it is localized.
That's right. We have online businesses use it like crazy. And so as storage demand rose, as regulatory environment, online disrupted, also our purchasing power got more. So the same dollar, if I was to buy a bike when I was a kid versus today, that bike today is a fraction of the cost.
Right.
So we're still spending the same dollar, but yeah, we also are able to use more. Perfect example of this is in homes. The greatest generation of baby boomers, average size home was 700 to 1,000 square feet. It had no garages, only 35% had fully functioning indoor plumbing. They didn't even have all the appliances, and yet their family size was twice as much. Today, the average size home is 2,600 square feet.
Dang.
2 garages, right? So our ability in the United States to purchase things, and now people may say, well, yeah, housing prices are crazy compared to those other generations. Yeah, but you're getting 3 times the house. You get all the appliances, you get granite countertops, you
You
get
get
2
toilets.
garage, you get toilets, things
Running
we
water,
like,
yeah.
the basics. So we can just buy more, but we have way more restrictions on what we can do with it. We can travel, right? We have days off. We have all of these things that literally just didn't exist prior to these new generations, Generation X, all the kids of the baby boomers. So it's a whole mix of economic and regulatory
Yeah,
landscape.
you've got people that store cars, that they've got
Yes.
motorcycles, quads, ATVs, all sorts of things that they're not using during certain summers, and because they can't just put them in their front yard, the
Bingo.
HOA,
Yep.
right? Regulations of an HOA. I parked my Airstream in front of my house, in my driveway. I've got a big driveway, and I pulled my Airstream in my driveway, and I got an HOA fine.
Yeah. Yep.
Because I left it there for more than 2 days.
Exactly.
I'm like, are you kidding me? We're cleaning it. We're doing.
It's my house.
We're
It's my-
packing
yeah.
it.
Yeah.
We're packing it for our trip, and so it makes so much sense. People are vacationing more. There's more hobbies. People in the 50s weren't freaking. They didn't have hobbies.
No, not at all. They didn't have paid
You
time
know what
off.
I'm saying?
Yeah.
I didn't have pickleball back then, dude.
No.
Like there was no pickleball.
the weekend wasn't even a thing until our parents' generation came. They were the first ones to even get a weekend.
So it's not just hoarders. It's basically
Yes.
hobbyists.
Utilization, regulation.
A lot more small businesses
small
as well.
businesses.
People that are like, even if I'm owning a makeup business and
Yeah.
I'm buying, let's say, makeup, lipstick, all that kind of stuff, I can store it in one of your facilities. What's the smallest unit you guys have?
So when you go into big cities, they get basically closets or even like locker type, storage. Generally speaking, though, it goes down to right around a 5x5.
Okay.
Is generally on the low end, and then it gets much bigger, 14 by 40s, 15 by 40s, and like you start to get into very big spaces.
What's the average time a tenant will stay? Now, this is a weird question because your tenants are completely different. They're not regular. They're not all people moving
Mm-hmm.
from house A to house B and they need it for 2 weeks because they're staging it or whatever else.
13
got-
months
13 months. Dude,
on
that's
average.
pretty long.
It is pretty long. You have some tenants that I would call our legacy tenants, right? They just never leave.
Mm-hmm. Are those
which
the
we
ones
like
that
those.
forgot that they have?
They forgot that they have it, or 2, they just
We need more
they
of
have
those
nowhere to
clients,
put
right?
it. Oh, yeah, absolutely. Love those. Thank you all. Thank you.
Yeah, shout out.
Yeah, that's right. Shout out. And then you have the other ones that are literally month. It's just they move in, it may be 2-3 weeks, and then they're out. And that makes up, if you go under 5 months, that's more like 25%. So we are churning every day. So today, I know that every single one of my facilities had multiple rent rate increases going on all sorts of different size units. Street rates were changing all today, and we had customers coming in and out all day long.
So it's not hoarders.
That's right.
Is the industry going to continue to grow, or will people stop having more hobbies?
So the
Because
industry.
I look at apartments, I'm like, people need a place to live.
Yeah,
Are
yeah.
people always going to need a place to store their stuff?
So the industry will grow as long as we think that regulation will continue, the price
yeah.
of land and house will continue to rise, and yet our purchasing power and our means to consume, like, once again, go back to the bike, the cost, but also I had to get whatever was in the store at that time. Today, I go on to Amazon, can get whatever I want at any time, right? So as long as the consumer can still purchase at a decent relative amount and has access to goods and services, yeah.
Amazing. So you wrote a book.
Yep.
What's the name of the book?
It's Growing Wealth in Self-Storage. My next one's actually coming out in July, end of July.
Okay, end of July. So we'll put a link down in the description below so that people can buy that book. Do you feel like it's possible for somebody to break into self-storage? I mean, you're smart, bro. Like, you're probably top 3 smartest friends I have.
That's I'm gonna keep this. I'm glad this is being recorded.
It's being
I'm gonna show
recorded.
my wife. So, honey, you heard it here.
But Bethany's in my top 2 smartest friends. So she's got you beat.
Yeah, I know that.
So you're super smart. So somebody watching this is listening and you're
It is
so
the
articulate.
number one commercial real estate asset for them to get into.
But can they get into it if if they don't have any experience?
So you have to realize, now this is the investing numbers and everything about it. So for all of you that say that sounds complicated, let me share with you this business model. Every single one can adapt. You can all do this today.
He needs to be a president of the United States.
Okay.
You know what I'm saying?
So-
Like, do you agree with this, Ben? Is
That's right.
Yeah.
Who's the guy that did this?
Maybe not any of the recent presidents, but let's go back to
Who's
someone
a
like
good
that.
one that did this? It reminds me of Phil
that?
Mickelson, actually. Phil Mickelson, every time.
Phil Nicholson. So
Are
I
you
thought it
Phil
would be
Mickelson
funny, and I
fan?
had Phil Nicholson sign my baby. Literally, I took my kid and I was like, "Sign my baby," and he did it because of Happy Gilmore. I thought it would be funny, right?
So
totally
good.
got it. Sign my baby. It was
I
awesome.
love. This is what he just walks around like this. You remind me of him.
Nice.
Okay, so what's the?
So
how do they get in?
What you do is in small towns, you have small facilities by mom and pop operators. You have all this technology and stuff, but this is going to be your real business model. What you're going to do is when you buy it, you're going to make people pay their bills. You are going to advertise, and that could be a website, maybe a good sign or something like that, and then you're going to answer the phone. And that business model right there will crush it, because you have to remember 60% of all storage facilities in the United States are mom and pops. These are people that own a storage facility.
What an
they do
amazing
basically
opportunity.
nothing. Incredible. Look at multifamily, right? It's inverse. It's only 20% are mom and pops, 80% are institutionalized. So the runway on self-storage, it's the newest commercial real estate asset class out there. It didn't start to get institutionalized until after 2008. Prior to 2008, it was less than 10%. was
Yeah, the
institutionalized.
biggest opportunity in single family, tired landlords. Biggest opportunity in apartments, tired landlords. Biggest opportunity in buying a business is tired business owners.
That's right.
They are not using technology.
Nope.
They're not picking up the phone.
Nope.
And they're doing a horrible job managing, and they're like
They hate asking people to pay their bills.
Right.
Like, it's amazing. You have 15% that are delinquent because the owner won't make them pay their bills and won't do anything about it. And they just forget about it.
And they get so tired of it, they finally get to age 60, 70, you're like, I'm sick of this. I'll sell it to you
Yep,
guys.
exactly. And two, they bought it and they got it so cheap. You have to understand, they don't need to. They're making so much money off it, they just forgot about it.
Right.
They don't need to run it well. Their cost to entry was teeny. They were building these things for $20 a square foot, where it's $100 now, right? And they've been minting money. There was no competition, so they just didn't need to do anything. So why would you?
Okay, so you already said your value add, but I just want to be clear on this. You're not developing new right now.
Yes, we are.
You are. Where do you think the opportunity is better in the development side, creating a product that doesn't exist currently, or going out and find? This is for you, not for
me.
the new
Got
person.
it.
Because the new person, you already answered that.
Yep.
The new person is find the small
Yep.
towns, small operators that are doing a horrible job operating.
Yeah.
Maybe even I guarantee you they'll sell so many of these on seller finance.
Oh yeah, I have one in a market that's 2 million people live in this market, 85,000 square feet, institutional quality, that we just got on seller financing. Interest rate, year 1, 5%, 4%, year 2, 3% fixed. From there out, non-recourse, I put 25% down, which would normally have to be 35%.
Yes.
The returns are wild.
And then you have to go qualify for the debt and all
Yeah,
these things.
all the
And
fees,
the
everything
debt
else.
also is sometimes, a lot of times, I call it toxic debt, which is like they force you to balloon at 5, or they tell you to refinance, or it goes whatever. You got fixed debt.
Yep.
Bro, you're the man. Okay, so do you, in your
Yeah.
current position,
Yes.
are you more excited about development or finding value add opportunities?
So 6 months ago, development. We are now moving into a point in the cycle, though, that I'm getting very excited about acquisitions. because like that deal that I just mentioned to you, that would have basically been impossible a year or two ago
Yeah.
because they would have never done that. They could have sold it for a ton of
But
money.
now buyers can't
Okay.
buy because
Yes.
the interest rates are so
They
high.
can't get their price.
So you're going for terms right now.
Bingo. I have my three offer strategy. So we walk up, say, okay, you want $5 million, right? If I have to fully finance this, I'll give you $3 million. If you partially finance this, I'll give you $4 million. And if you'll fully finance it with very little down and terms that are very favorable, I'll give you your $5 million. So our three offer strategy
Or
is,
maybe even a little bit more.
or yeah, exactly. Or
What do you
more.
care if you got
Absolutely.
really great terms?
100%. Exactly. So that is starting to play out in big markets with big assets. So I'm starting to get very excited about that right now. On the development front, where costs are so high, it limits where we can go. So it's never been more expensive to build storage. So the good thing about that, though, is the development landscape is dying because people can't get the money to do it. That means we're moving into like a period of after 2008 when development shut down, high demand. So I'm going into markets that have high growth rates, high prices, development's getting shut down, so demand is still building, and we can go into that market and we'll have a lot less competition moving forward. Insulates us a lot.
Are you guys as excited about self-storage as I am?
I am.
That's right, man.
Ben is, guys.
Ben is.
And Ben, you're gonna shoot this asset after I invest in it.
I
So
might be honest with you
Yeah.
about this, like now, but you should tell the story about the military. Like I heard you on a podcast talking about the military. Like it's like
what podcast was it? We'll send people to it.
So I'm not sure which one.
I think, right?
Mauricio's, we talked
Like,
about
he asked
military?
you- like you said, maybe it was a different podcast, but it was like the most interesting thing you found in an abandoned store, like because.
Oh yeah, yes. Oh yes, yes. Yeah, that was in yours.
We'll
that was
send
crazy.
them to we'll send them to Bethany Little
Yes.
Slams podcast.
Yeah, that was crazy.
Okay. By the way, we have a live audience. This you know how we do it. We're here in a hockey stadium. This is freaking cool.
This is rad.
This is Stanley. This is where they have the Stanley Cup Finals.
The next shoot, we'll be shooting this direction, and that will be the live audience.
Yeah,
That's right. There you go.
Would be so cool.
Filled.
So if you guys are excited about this and you want to scratch that itch, you're only taking accredited investors.
Yes. So right now we're only taking accredited investors, but Bethany, I'm sure will.
She'll fix that
Fix
at one
that.
point.
That's right.
Reg A
Yep.
or Reg
Yep.
CF at some point. Guys, if you want to scratch that itch, go and invest. I'm going to invest with you. I'm going to stroke a check just so we can. This is going to be the most expensive YouTube video we've ever done. I'm going to give him $100,000 so he will let us on the property so we can film some drone footage and do an interview with you.
Nice.
How far along is that project?
So surprise. So the two development projects, the one we're going to go see one today, which you guys are going to see. We're currently under construction of the office building, everything else. Surprise, we're fully permitted. Everything's in the work. We're finalizing financing, and we break ground. So a month maybe, and we'll
Amazing.
start to break ground. Yeah.
Amazing, amazing, amazing. Guys, give it up for AJ Osborne in the live audience, please.
Thank you, live audience. There's like 100 people here. This
Yes,
is amazing.
100
Wow.
people.
Wow.
John, you're so strong. You made your clap sound like 100 people. Go follow him. We'll give you all the links. He's amazing. Do you think you'll always live in Eagle, Idaho?
I gotta say, I think I will. We so love it there.
I mean, how could you not? You had a turkey next to you where you're naked all day long.
I know, right? Sit in the bathtub and look at a turkey. I mean,
That's like legit. You do that.
pretty amazing. Wild
You got
turkeys hang
turkeys.
out.
You got deer. What else you got? over
Elk,
it?
we got cougars, we got all sorts of stuff up there.
What about
Amazing view.
porcupines? Have you seen one of those?
Porcupines, yes, we do have porcupines. We try to avoid those, considering we have two large dogs, and that can get nasty with
Those
them.
are
so.
big boys.
Yes.
And they even have a chicken that I named. The name of the
That's right.
chicken is Crispy.
Crispy.
So go and watch that video, and we'll see you guys in the next video.
See you guys.
Boom. Dude, thank you.
Good, thank you, man.
You're
It's
amazing.
awesome.